the dollar is seen as quite positive for most of the analysts and for most of the investors this year. The positioning is very strong overweight for the dollar already, and the dollar is not cheap. So from this factor, there is some headwinds coming in. Some data were a bit weaker in the US, but overall, it remains the base case scenario that the Fed will be earlier, faster, and more aggressive at the end, as for example, the ECB. And that will support the dollar in the medium term. And I think on the dollar, there is one important factor which is often a bit underestimated. It is we are in a world where a lot of trades are based on one factor, which is the low yield. So many investors had to increase their investment in riskier assets to increase the yield over the recent years. And that means if you have a higher risk in your portfolio, you need some sort of balance and some sort of hedge. And the dollar did a very good job in this hedging behavior lately. So whenever there was a risk-off environment, the dollar performed positively. And I think this behavior is very well recognized from investors, and therefore the dollar will remain supported in the future.
Andreas, I know in addition to the rate hiking path, investors are keen to understand how the balance sheet is going to evolve at the Bank of England. And today they reaffirmed, the MPC, that it will consider beginning the process of actively selling bonds only once the bank rate reaches 1%. Now, we know that there were a number of dissenters who were actually calling for a 50 basis point hike today rather than 0.25%. If they gain momentum, those more hawkish members, we could potentially see them reach that level at their next meeting. How are you thinking about them actually beginning to shrink the balance sheet?
Okay, you're right. It was a bit of let's say a positive surprise, this dissenter. But if you look, there are more or less five hikes priced in for the Bank of England. So it will not come to a massive surprise. And it was also this bit of surprise was now priced in. The sterling got some support, and but will it change the complete view for the sterling? I don't think so. So from an FX point of view, the decision or the decision is more the Bank of England really delivering what is already expected and priced in the 5 hikes, or a bit less? So this relative view will influence FX a lot more.